I know times like this, you just take it slow. Fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 19th of May 2024. I'll be doing the weekly market review. So let's get started, starting with the XY. Here we have the weekly time frame chart. You can see we've seen some sell off in the XY. Another revisit. We took out this inside liquidity and we're in this bullish order block range. We didn't close below the mean threshold of the bullish order block. You can go and measure the mean threshold and you'll check that we didn't close below it. We're right now we're in conditions that I cannot precisely anticipate the future moves in the market, and there is nothing wrong with it, but you have to identify the areas that you cannot excel at, or the areas that you cannot precisely anticipate the next direction, and just stay away from the markets. Going to the daily time frame chart, you can see we broke down lower, fair value gap, retrace to the fair value gap. From here, we'll be seeing next week how we trade. We roughly traded to the rejection block, as you can see, and we've seen some reaction. So from here, if price wants to trade up higher, it would trade and close above this fair value gap. It would be treated as inversion fair value gap. We'll be treating the weekly inversion fair value gap and this daily fair value gap as support when we retrade back to it as a retracement, and then we'll be attacking higher prices this high and these relative equal highs. So this is how what I'm thinking for DXY. So that's going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see price has rallied up higher and took the buy side liquidity. So I mentioned that already last week that price can just refuse to break down lower towards the weekly fair value gap and the bullish order block, the weekly bullish order block, and it can just rally up higher and attack the buy side liquidity. And in a matter of fact, it did attack the buy side liquidity. From here, we're trading at the all-time high territory, so I'm not sure. We just look for highs to form, and then every retracement we'll be buying it and just aiming at the highs. So in a buy program, you would be continuously looking for buy signals and just aiming for the highs that were recently created. So this is the high that was recently created. Although this could just be a turtle soup. I'm not gonna be too futuristic with the anticipations, but this could be just a turtle soup to attack the buy side liquidity here, and it would start breaking down lower right now. But sticking to what we know and how we look at the markets, if we are in a buy program, we stick with the buy signals. So going to the daily time frame chart, as you can see, took the buy side liquidity right there, and then retrace to the fair value gap. So we'll see here, if we close below this fair value gap, we might treat it as an inversion fair value gap that we can be selling at and targeting lower prices. Here we have a low resistance liquidity run below these lows. So this is a potential area for price to run towards. So that's gonna be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see price attacked the buy side liquidity right there. We have a fair value gap between this candle's high, this candle's low. Price can retrace after taking out the external range liquidity. It can retrace and reach to the internal range liquidity right there. So this is a potential area to look and see if price wants to retrace to. We're not looking, I'm not gonna be too futuristic with my anticipations. As a traders, we just want the next candle. How is the next candle? What's the next direction move? I'm not anticipating the next yearly candle or the next 12 months anticipation or 6 months anticipation in the future. I'm just aiming for the next weekly candle. What's the direction of the next weekly candle based on the intel that has been given to us? We have a fair value gap here, and we took the buy side liquidity. Price in the markets, price only goes up and lower, so it only goes up to take out the buy side liquidity and reach to an inefficiency, also like known as the fair value gap or the volume balance or the volume balance, fair value gap, etc. Any inefficiency in the market, price will be just going up higher to satisfy that need to reach to a high or to fill an inefficiency. It will go down lower to fill an inefficiency below market price or to take out sell side liquidity. So here we took out the buy side liquidity. So what would be the next scenario? Because market's always seeking buy side liquidity and sell side liquidity. It's always seeking high prices and lower prices, trying to engineer interest both on both sides of the markets. So it has already took out the interest on the buys. A lot of people who will be buying this, but when a matter of fact, the next direction would be, in my opinion, the weekly fair value gap right there. Going to the daily time frame chart, you can see took out the high and what can potentially start breaking down lower, tag this low, reach to the fair value gap. This would be the move for next week. This is how I'm expecting it. So external range liquidity back to internal range liquidity. From internal range liquidity, based on the intel that is given to us, we can refer back to the internal range liquidity that's from this run, from this high to the low that will be formed at this fair value gap. We can look at the internal range liquidity there, and then we can aim at that. And then we will be waiting. Will price start breaking up higher above this high? If it break above this high one more time, we'll be looking for internal range liquidity one more time. If it start breaking down lower, we'll be looking after it break down lower, we'll be looking for a retracement towards the fair value gap that is inside the swing from the internal liquidity to the external liquidity. That's pretty much how, I just gave you the cheat code to how you can pretty much navigate the markets with ease and not being in fear of what if markets does this. We're not really, we don't really care about what the market is going to be doing in like 6 months. What we care about is like the next weekly, the next direction move, the next daily candle. What is the next daily candle is going to be? Because every candle is open, low, high, close. This is for the bullish candle. For a bearish candle, open, high, low, close. So open, low, high, close, and open, high, low, close. So these are the two things that can happen in the markets. It can just either open, go down lower, run up higher, and then close near the highs, or open, rally up higher, and then break down lower, and then close near the lows. The run up higher for bearish candles, the run up higher here, it is the manipulation. And the wick down below, it's the distribution. It's where smart money are just distributing orders, and it's where the market closes. So, and you try to position yourself in that wick above. In bearish candles, in times where you're trying to sell, you would want to position yourself in the wick above, and you would want to take profits in the wick below. That's for day trading, where you're trying to hunt for the pretty much the larger portion of the day. The same goes, the image club pose for the bullish candle. When we open, break down lower, this is manipulation. You want to be in that manipulation. Every single BT array, every single pattern that you're trading is going to be present there in that small wick right there. And you'll be holding it for the high. How to catch the high? Tools and there are some tools and techniques to take profits at the wicks above. Regardless, one of them is using time. So I gave you a hint on how you could be taking how could you position yourself in the manipulation and how you can take profits in the distribution area by using time. This is one of the tools that can, or the techniques that can be used in order to accomplish that thing. So it will be opening, running down lower, manipulation. This is where you'll be entering every BT array, every pattern that you're trading is going to be there, running up higher, distribution. The smart money are just taking off orders, they're just taking profits and closing near the distribution area. That's pretty much it how the market moves. All right, so now we took out the buy side liquidity. We just care about the next week, the next daily candle. So based on the enter that I have given you, pretty much for NQ, that on we have attacked the buy side liquidity, we are potentially seeing we can potentially see price retrace back down lower to the favorite gap. So it would be a retracement to the favorite gap, which means we can have some sell side delivery towards the favorite gap. So what does this mean? This means that every candle you'll be anticipating next week, every candle to open, run up higher, break down lower, and then close. It will be a bearish down close candle. So if it's a bearish down close candle after the opening, you'll be waiting for any buy stops raids. And in every buy stop raid, there's going to be a rejection and it will start breaking down lower, breaking down lows and just rejecting highs. Every time it runs up a high, it will just reject it and continue trading down lower. Every time it trades above a high, it will reject it and start trading down lower. This is when you know that you are in a sell program on a lower time frame. Now on the high time frame, we could be on a buy program, but as we've reached to the external range liquidity, we can potentially see price retrace to the internal range liquidity. And inside that internal range external to internal, you can see a sell program inside a macro buy program. So I'm quite sure that it went over some of yours head, but I'm pretty sure if you repeat this video and just listen to what I've mentioned again, you'll be able to get what I just mentioned. So it's very important points for you to just to be careful about and just to monitor on your daily basis and how you're trading, because if you want to become a better analyst, you will be analyzing more. If you want to become a better backtester, you need to backtest more. If you want to be a better trader, you need to execute more. Without execution, without having a plan to execute, you'll just be an analyst, a chart artist. You just be drawing all of those lines, rectangles, having all those clean charts. But in a matter of fact, you wouldn't be a trader. You're just drawing on the charts. You're just an artist. So you must differentiate being an analyst, backtester, and a trader, because there's a tremendous changes and tremendous difference between the trader, the analyst, and the backtester. You have to start with both the analysis and the backtesting, but you shouldn't be in that period for a lot of time. By time at some certain point you should be just telling yourself, I have done enough of analysis and I've been getting it right most of the times. I'll just get over it and I'll start executing, because execution is what differentiates a trader from an analyst, a trader from a backtester. So always try to be the trader, the one who executes, not the one who just is an artist who just draws on the charts and oh, like this is the line, or it draws out to the line. I'm drawing those lines for you to just see what I'm thinking of for the next week. It's not for me, it's more for you, because I know for a fact that in my head that I'm looking for sales next week. So I'm trying to show it to you in a visual diagram where you'll be seeing where I'm aiming at, where I'm like I'm trying to show you the concept of like after we took out the external, I'll be aiming for the internal. So I'm aiming for the internal. This is what I'm aiming at. So if I'm aiming for the internal, what does that mean? Every candle from starting from tomorrow on Monday, I'll be looking for sells until we fulfill and reach the favorite gap. Anything beyond this, it doesn't matter to me. I don't care about it. My main objective, and I'm aiming at this favorite gap as an internal liquidity, as means of draw liquidity for my next week's trading. After that, we need to recess, we need to look at the charts again, and we need to think about it one more time. But for the next week, my plan is to drive price down lower towards this favorite gap, because a lot of people has actually sold here. By selling the price down lower to the favorite gap, they will be confident that price is gonna be continue driving down lower, but then we'll be driving up higher and taking out the buy side liquidity one more time. I'm not gonna go too in depth with market, or let's say the techniques that smart money uses, but that's gonna be pretty much it. I've just mentioned what I need to be mentioning. That's gonna be pretty much it for Nasdaq. Going to Dow, here I'm viewing the weekly time frame chart and I'm viewing the continuous contract. As you can see, Dow hasn't reached to the buy side liquidity yet. It can reach to the buy side liquidity later on. Going to the daily time frame chart, you can see it's favorite gap, reach to the favorite gap, and we can potentially see price reach to the buy side liquidity right there. So that's gonna be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. As you can see, we attacked the buy side liquidity right there. It could be just a stop rate, or we could just resume going up higher for this buy side liquidity. Going to the daily time frame chart, same thing goes here. You can see the bodies are just at the high or at this buy side liquidity, and we retest to the favorite gap. From here, we can just run up higher, or we can break down lower and treat this as an average favorite gap. I'm not too confident in my readings for the forex markets, uh, mainly because there's been a lot of geopolitical things happening around the world, and it's not been in the best conditions for the forex market. So that's gonna be pretty much it for Euro USD, or also known as the fiber. Going to pound USD here, or also known as the cable. Here I'm viewing the weekly time frame chart. You can see pound also has took the buy side liquidity by just a few pips, and it has traded down a bit and closed. Going to the daily time frame chart, here we have price took out the buy side liquidity. We can trace back down lower to the favorite gap and this lower favorite gap, and then we can potentially just continue trading down lower or continue trading up higher. So that's gonna be pretty much it for this weekly review. I really hope you found this one insightful. Go back again on what I mentioned about internal and external liquidity when I was reviewing Nasdaq, and you'll be able to get a lot of insights on the markets and how you can be framing your week on how you want to trade. So you have an idea in your head, like I'm gonna be a seller next week in NQ. So going into the markets on a daily basis, you'll be just trying to sell above the highs. Everything after the opening price, anything above the opening price is valid for you to sell, and you just be aiming for the lows. And you can utilize time, as I've mentioned, as a mean of technique or a tool to be capturing your profits near the distribution area. So I really hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.